All right, the Uniform Capitalization Rules of Code Section 263A. That is a absolute doozy. But we're just going to call it UNICAP. That's a lot easier. The UNICAP, the Uniform Capitalization Rules. These require certain costs that are directly or indirectly related to the production of real or tangible personal property to be capitalized as part of the cost of that property. This means that these expenses must be added to the property's basis rather than being immediately deducted as current expenses. The UNICAP rules apply to businesses that produce or purchase property for resale and also to real property improvements. Now let's take a step back. Why is this important? Why are we even talking about this? Well, because for book purposes, it's better to capitalize than expense because an expense is a reduction in your net income, whereas capitalization increases your assets on the balance sheet. It is the opposite for tax purposes. You want to take expenses, which are immediate deductions, as compared to capitalizing. Capitalizing means you have deferred expenses. You can't take those. You'll eventually have to depreciate, amortize, etc. So this is essentially saying we've got various costs because a cost can become an expense or part of a capitalized asset. And that cost, a lot of these will be added to the basis rather than expense. So that's what we're dealing with here. The IRS trying to kill our fun again, trying to make it so we can't take immediate deductions. When an entity is not subject to the UNICAP rules, it means that it doesn't need to capitalize certain costs associated with property production or acquisition for resale. And these are certain costs. We will go through these. You will memorize what these costs are. So again, if you are subject to the rules, you have to capitalize these costs. If you're not, you don't. The UNICAP rules generally apply to businesses producing real or tangible personal property. And again, this deals for larger companies because that average annual gross receipts amount that changes annually for the 3 preceding tax years. If you are below that amount, you don't have to worry about this. But if you're above that amount, you are subject to the UNICAP rules. And as such, there are certain costs you need to capitalize towards your inventory or whatever it may be. So again, if you're subject to UNICAP rules, the entity must capitalize specific direct and indirect costs affecting taxable income, cash flow, and record-keeping requirements. Some of these capitalized costs may include direct labor, direct materials, and certain indirect costs. Being subject to UNICAP can result in higher taxable income in the short term, increased record-keeping, and complex calculations. Don't we love that? On the other hand, entities not subject to UNICAP can generally deduct costs associated with producing or acquiring inventory for resale as they're incurred, potentially leading for lower taxable income and, as such, lower taxes. All right, not too bad. Again, we're seeing here just another sort of downside for being a larger company. We're trying to help these smaller businesses out. All right, dealing a little bit more with that. The purpose of this is to ensure consistent and accurate tax reporting. When is it not? When is the reason for any of these not that? To capitalize certain direct and indirect costs associated with the production, acquisition, or improvement of real or tangible personal property. So physical things, not intangibles. By capitalizing these costs, businesses add them to the property's basis and recover them, cost recovery, depreciation, over time through depreciation, amortization, or cost of goods sold, rather than immediately expensing them in the current year. We're not going to be really dealing with amortization because that is real or tangible property. And the main objectives here are the matching principle by capitalizing costs and allocating them over the useful life of the asset or the period in which the inventory is sold. The UNICAP rules promote adherence to the matching principle in accounting. So also, we deal a lot with depreciation of, let's say, a machine, but what about cost of goods sold in inventory? If I make a wooden chair, I can, if I wasn't subject to these rules, I could just, all of those costs, I could just immediately expense them. However, if I am subject, a lot of those costs, such as paying someone to build the chair, the wood, that has to go into cost of goods sold, which eventually I cannot use as an expense until the asset's actually sold. Journal entries, cost of goods sold, debit, cost of goods sold, credit inventory. We've got to love those journal entries coming up. The principle here aims to match revenues and expenses in the period that they're incurred, providing a more accurate picture of a company's financial performance. Next up, prevention of tax deferral. The UNICAP rules prevent businesses from deferring taxable income by expensing costs associated with producing or acquiring inventory for resale immediately. By capitalizing these costs and forcing them into an asset rather than immediate expense, businesses recover them over time, which ensures a more consistent and accurate allocation of tax liability. Next up, consistency and comparability. The UNICAP rules provide a consistent framework for businesses to capitalize costs, making financial statements more comparable across different companies and industries. And then reflection of economic reality. The UNICAP rules ensure that the costs of producing or acquiring inventory and property are reflected in the value of those assets, providing a more accurate representation of a company's financial position. Not too bad. I mean, not that this is critically important here to understand. This is more for you understanding why we're doing what we're doing. I obviously explained it as well, but just again, a little more FYI information. All right, now here are our actual examples. These are costs that you may have a question that says, what are some costs that have to be capitalized under the UNICAP rules? And these are the examples that we'd see. Obviously, getting familiar with these, in theory, in a perfect world, would you memorize these? Sure. But are there more important things to memorize? Yes. But again, if I had 2 terabytes of brain storage that I could access immediately and I could memorize everything, I would memorize these. So take that as you will. Direct material costs. These are costs of raw materials or components used in producing or improving property. For example, a manufacturer of wooden furniture would need to capitalize the cost of wood and other materials used to make furniture. That goes towards cost of goods sold, rather than immediately expensing that and getting the tax benefit right away. Next up, direct labor costs. Wages, salaries, and benefits paid to employees directly involved in the production process. For example, the wages of assembly line workers in a car manufacturing plant will be subject to capitalization. Next up, indirect production costs. These are costs that cannot be directly traced to a specific unit of production, but are necessary for the production process. These can include quality control and inspection costs. I'm not going to go through and read the descriptions of them. Feel free to do it if you like. But again, these are costs. I may have a question that says which needs to be capitalized, and maybe, let's say, rent for production facilities is there. And then you've got a few other ones like accounting fees or, basically anything that's not included here. This is a simple memorization of these items would have to be subject to the Uniform Capitalization Rules. Anything else on here does not. Utilities, depreciation, any of these, just, again, read through them here. Memorize them if you have the time and mental brain space. Storage and handling costs and purchasing costs. I'd say I'd seen these ones more often than the other ones. And I'd say these are the more common ones. Quality control, I've seen those. Possibly utilities. But again, in a perfect world, you'd have them all memorized. And memorization is the name of the game for a lot of these exams. Make sure you memorize the formulas, everything you need to. Note that certain expenses are exempt from the UNICAP rules, such as marketing and advertising costs, R&D costs, and general and admin. These are not directly related to the production process. Another common question is you'll see this as answer choice 1, this as 2, this as 3, and then you'll see one of these as 4, and then obviously one of these would be the right answer. Now, if it says which of these would not be subject to the Uniform Capitalization Rules, you might see 1, 2, 3, and then let's say 4, and then this would be the right answer. So remember to understand what the question's actually asking. If it's asking for something that's subject to the rules, it would be one of these. Something not subject to the rules, it'd be one of these. And this makes sense. It's something that applies to the manufacturing of our physical goods, our inventory, whatever it may be. All right, now in summary, the UNICAP rules require businesses to capitalize various costs directly and indirectly associated with the production, acquisition, or improvement of real or tangible personal property. These capitalized costs are added to the property's basis and recovered over time through depreciation, amortization, or cost of goods sold. I would almost eliminate amortization here again, just like I said before. It's really just depreciation and cost of goods sold. Nothing too wild there, but you got this.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.